So friends, welcome back. So in last part one of stock market basic, we understand why stock market is important, why it is needed, and what are the benefits if you invest in the stock market. And we have gone through the how we can invest in the stock market as a retail investor. So in this video, we are going to go in detail. And so if you are not seen the part one of the stock market basics for the beginner, just go and check it again, and then you come here. I have given the in the top. You can see the link, and you can see and click and check it out. Okay. And meanwhile, let us start the second part of it. So again, Ms. Tapan Doshi, welcome you, and let's start the part two of stock market basics for the beginners. Opening time of market is basically, as I told you, that it is from 9:15 to 3:30 p.m. Okay, so 9:15 is a.m. Now between 9 a.m. to 9:15 a.m. is a pre-opening. Okay, so real market start at 9:15 almost at this time. Okay, so at from 9:15 you can put the trades. Now normally what happens when you put the trades, you suppose you are buying the stock of a reliance. Okay, on the opposite side there is a seller. So when the buyer and seller figure match, at that time transaction happens. So suppose if you see in a trades, when you put a trades, okay, so suppose you put a trade of buying 10 Reliance at 2500 rupees, and the seller is also there for 10 for suppose 2501. Okay, then the trades will not happen. But if someone goes down, like suppose you as a buyer you keep 2500 only, but if the seller wants to sell, okay, he may come down to 2500. So both these matches, and then the transaction happens. So at that time the trade happened. Okay, now this is a very simple example given. So similarly there will be like on the buyer side it will be 10, 15, 20, 30 quantity. Okay, similar seller will be 5, 4, even 1, 2, same way. Similarly different trades will be there. Okay, and again at a different price. But in short, whenever the buyer trade matches with the seller trade, okay, not trade, basically the what you quotation basically. Okay, so when the buyer quotation matches with the seller quotation, at that time only trades are correct. And you will never able to come to know that was from whom you are buying or selling. So suppose you are buying a 10 shares of Reliance, you will not come to know from XYZ person you have bought a 10 shares. That will never. Of course, who knows the who knows the stock market, knows the NSE, BSE, the DP, everyone knows that okay, these are the buyers and the sellers, but you will never come to know. So this is how normally trades happen. Now, who can trade in the market? The person who can trade in market should be registered with SEBI. Okay. So basically, understand when you open a stock booking, basically and Demat account, indirectly you are complying with all the SEBI regulation and all the brokers, FII, who are FII? Foreign institutional investor. Okay, foreign institutional investor and DII, domestic institutional investor. Okay, so all these guys are actually no, they are listed with SEBI and everyone. Okay, then they have to comply with all the rules and guidelines of SEBI. Similarly, as a retail investor, you are a retail investor, correct? So retail investor has also to follow all the rules and regulation of SEBI. If they are not following, then their account may get closed. So that thing you have to keep in mind whenever you are trading in a stock market. Correct. So you have to follow all the rules and regulation of SEBI. And broker will ensure that as a retail investor, when you are trading in the market, they will ensure that yes, you are following all the rules and compliance. And then only you can trade in a stock market. Okay, so this was all about now. Normally, whenever this is how you can trade in a day, and at the end of the day, you must be seeing this much of volume happen in NSE, BSE in crores. Okay. Similarly, you must be saying the buy figure, sell figure of DI and FII. You can check that in the Moneycontrol. Okay. So you may be knowing that figures may be that FII net bought of 1,000 crores. Okay, similarly, DI also net sold or net bought. Okay, suppose they are net seller of 500 crores. So this is what you must be coming at the day end. Now you must be seeing all these figures. Now all these figures are nothing, but no, actually it's a way to telling what has been traded in the market over the day. So that is how you will come to know. And all these things is available freely in Moneycontrol, then Spinner.in, and all this information are easily available. See, normally I use normally for finance knowledge and everything. No, moneycontrol.com and also Screener.in. Both are free website. You can anytime go and check it out. All the information will be available then, and you can analyze any stock and everything. Of course, how to analyze and when to analyze and how to buy a stock and all that, it's a completely different topic. I will not be able to cover everything here. But yes, all these things you can go and check in Money Control Skinner.in. This will be very much easy and helpful to you to understand everything. Today we are going to talk about basics only. Now talking about FII and DII. Basically FII, as I told, is a foreign institutional investor and they have to register with the SEBI. Who are foreign institutions? Are nothing but no money flowing from the Western countries like from USA, Europe and everything. They are coming and investing in India. And as an institution, also there may be a hedge funds, mutual funds of outside country, they are coming and investing in India. And they are all hot money. They may coming and get out fast also. Correct. So that thing you have to keep in mind. But yes, if the more the FII money comes, the market normally goes up. Earlier we were actually very much dependent on FIIs earlier, but now our dependence on FII has gone down. The reason is simple. The retail investors like you has taken a lot of part in retail, basically in stock market and started investing. And that is why if you see even if you see the last, you can say from October, FII has sold almost more than 3.5 lakh crore of shares. Okay. However, against that, DII has literally bought around more than 3 lakh crores of shares. So you can see that whatever FII sold is literally bought by the DII. And that is why the set off is there, and as a result, the market has not fallen too much. If you see the outperformance, what Indian market has given is great, correct? So from as you can see that FI and DI are literally normally they go opposite. Okay, normally FI whenever they say DI may buy because then only market gets stable. But if there is no thumb rule that they should be opposite. But yes, normally it happens like this. As an end, retail in participation is coming more and more. The DI is getting stronger and stronger. Now, who are DI? DI is nothing but no. DI are like no mutual funds. Okay, even insurance company, mutual funds like HDFC Life, correct? Sorry, not HDFC, AMC, ICICI, AMC, Fidelity. Similarly, so many AMCs are there. Similarly, insurance companies are nothing but this, no, HDFC Life, then LIC. LIC plays a big role. Okay, they are the one of the largest institution in India. So these are how basically an insurance company which normally buy and sell in market also. Even there are many institutions also. Okay, so most of institutions also they buy and they register with the SEBI and they buy. So these are all the DII and of course four and most important retail investors. Okay, now retail investors are nothing but investor like you and me. Okay, so this all this comes to domestic institutional investor, and this DII is the one of the main part which plays a big role, which plays a big role to actually know basically balance the market because whenever FI goes out, no, DII plays a big role to stabilize the market. So that is the thing. Again, when you come into stock market, no, you must be hearing now you have so many channels available, CNBC business, and there are so many brokers. Brokers are nothing, as I told you earlier, also through which you can open an account and you can start trading. Like we have a Kotak Securities, Zerodha, Upstock, Bro, Angel, Motilal Oswal. All these are various stock brokers which can help you to trade in the market. Okay, and they provide lot many research reports and everything. Now, again, there is a difference between what you say the discount broking and traditional broking. So, who are the discount brokers in India? Like no, like Zerodha, Grow, Upstock, all these guys are the discount broking. Even Angel is now no, they are coming with the Angel Prime, which is a discount broking. However, who is the traditional broker? Traditional brokers are like Kotak Securities, then Motilal Oswal, okay. Even you can say ICICI Direct. All these are traditional brokers, which say basically discount brokers normally they don't provide research reports and everything. Because you understand their basically framework and that the way of no structure of the business is such that they are providing zero brokerage. So and that's why they are not giving any help, and so they are not researching anything, and they don't provide research reports and all that stuff. Even the trades you have to put by yourself. However, the traditional brokers are nothing but they provide and support to the retail investors. They provide research reports and many. Even you can call and dial and call facilities. There you can call the dealer and you can put your trades. So it is much more convenient for a new investor to go through the traditional broker compared to the discount broker, because you understand discount broking is where no you know everything, then you go and then you can take a help, but when then you can take a do a trades and everything. But traditional broker I know where you can actually know, even if you're not aware of, you can talk to the broker, you can ask their opinion and everything, and this is how they can help you to select a good stock, because if they are already doing lot many research and they are publishing research reports and everything. So through that you can be helpful, and that is why my suggestion is that if you are a new investor, no, my suggestion is to go to traditional broker, because no, at the end of the day, these guys will help you to trade and everything. And once after 4 5 years, you may say, okay, I know everything now. I can do by myself and do trades by myself, and I don't need any support from the brokers. And then you can go with the discount broker. So this typical thing you have to keep in mind, because many questions I am getting on that part, that what to choose, whether to go with the discount broker or traditional broker. And understand one thing, guys. No, you are coming here in market to earn profit, and when you want to earn a profit, you just see a profit. And now for that you have to give you 0.2 0.3% of your as a brokerage, then it's okay. But if you are getting a good advice from the traditional broker, then that will help you to not trade much better, and you will able to easily able to go through the cycles of stock market. Because see, this stock market is quite strict. If you don't not aware of the things, it will punish you like anything. I know it's a money making machine, but this money making machine may go against you if you are not able to provide the right framework and everything. And guys, if you want to understand about what type of right framework you should follow and how to pick up a multi-bagger stock and everything, you can click below link in the description, where I am conducting a free webinar and masterclass on how to compound money, and I'll tell you the three secrets on how to select a stock, how to design a portfolio, and what type of stock market mindset you should have. So that you can attend, which is free and which may be happening in this week also. So you can attend free and you can get advantage of it. Other way you can invest is through mutual funds. Mutual funds plays also a big role, because suppose you are not aware of stock market much more in detail, you can come and invest in the mutual funds, because mutual fund may give you a better return, maybe around 13 to 15% return. Average CAGR they are giving normally, and the reason is simple. No, they of course they may charge an expense ratio of 2.5%, 1%, whatever it is. 2.5% if you are doing an indirect investment, direct investment if you are doing, then you may get around 0.8 to 1%. So that type of expense issue they may charge to you. But if you are a newbie and you are not getting any time, mutual fund is the way to go. And if you want that service, that also link is given below, so you can take help of it. But yes, you can go for mutual fund, or you can go for direct equity investing. Okay, so this is the way you can go. And my suggestion will always be that you can take both in your stride, because a mutual fund will help you to take an average return of 13 to 15%. But yes, direct equity, if it goes right, it may give you more than 20% CAGR return also. So guys, that is my suggestion. So guys, hope you like this video and hope you are able to understand all this stuff in much more detail. And do stay connected with me by subscribing with my channel. And if you like this video, just click the like button, and I'll see you soon in the next video with much more better knowledge about stock market. Okay, so Tapan Doshi signing. Thank you.